everyone, welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of January the 30th, 2017. Now, we're going to have an extremely volatile, choppy week coming ahead. We've got the non-farm payroll, we've got the Federal Reserve, we've got the ECB. We have a lot of things going on in the market that is going to create some very, very choppy conditions, along with, of course, what we're seeing over the course of the weekend with more protests in the U.S. When we look at this, what's going forward, that's going to create more havoc in the market. So for Trump's first week in office, there's certainly a busy one, but it's also causing a lot of wild swings in the market, and I expect this to continue here, guys, until somebody closes this guy's Twitter account. But again, without getting political on this, it is problematic when we've got these things going on. So when we look at the US dollar's been moving basically all over the place. But what we can assess here are key VantagePoint 18-day predicted moving average 101.05. We've closed below that at 100.52, and we are currently in a trend line break below that key VantagePoint 18-day predicted moving average. Now, our neural index is pointing higher. Our predicted short, medium, and long-term differences still very, very sideways with a bearish, somewhat bearish. Our predicted MACD below the zero line, that is bearish, and our predicted RSI, is rising, but we're still below the 50 level. We can see we're at 39.4. To start getting aggressively long with the US dollar, we're looking for our predicted RSI to be above 50, and more importantly, above this green line, above the 60. We don't have that. Now, on a positive note, and again, when we're trading Forex, we need to understand the direct intermarket correlations. The global equity markets and the US dollar have been moving up and down together. So the reason why, in my respectful opinion, the US dollar did not sell off completely is because the equities turned around back to the upside. We can see the S&P 500, 2269 is the key vantage point level. We've closed very bullish at 2289. The DAX also well above that key vantage point 18-day predicted moving average, and of course the Nikkei, very important, with a fresh triple EMA cross. These all point to further US dollar gains. So we could see a hawkish FOMC, could be a very good non-farm payroll number coming on Friday, and some of that information potentially could have been leaked, and that's why money is moving over into the dollar and back into the equities, because like I said, the intermarket correlation is they're moving up and down together. And right now, even oil is moving up and down predominantly with the US dollar. That is that's the current intermarket correlation. We can see oil, the key vantage point level 53.03. We've managed to close at 53.17. So oil, well, I don't think it's going to have a great year in 2017. I would expect a potential test of the $60-62 a barrel, but probably not until April or May, maybe even June. Normally February, not an overly strong month for oil, so we'll see how it plays out, but right now very important. Now, when we look at gold, gold is a big player in our Forex trading. It is absolutely huge. If gold moves up, the euro moves up. The Japanese yen moves up, the Swiss franc moves up. So it is highly correlated to our Forex pairs. Right now, gold is starting to turn back to the downside on some of the better data coming out of the US. We can see a strong trend line resistance at 12, basically about the 12.15, 12.18 mark. We do have a fresh triple EMA cross from VantagePoint. That critical resistance now 11.92. We're closing at 11.88. But again, with this executive order that Trump has put in place, it's going to be very interesting to see how the market responds to that, because it's going to create unwanted volatility. So right now we want to watch these levels very closely, 1194 all the way up, and again 1192. Right now we have a crossover on the predicted MACD to the downside, our predicted short, medium, and long-term differences and strength indicator all below the zero line. But what concerns me here, when we look at our predicted MACD, we can see that we went towards a breakout level right here to break below that all-important 40 line. We are below 50, but we want it for a momentum play. We're looking for it to break below 60. Now, Case in point right here, we can see going back just about 2.5 months ago, if we follow these indicators from VantagePoint down, we can see when we connect the dots here that this led to a substantial move to the downside on gold. It started with our triple EMA cross, which was our first move. Our predicted differences was our second. Crossover in our predicted MACD was 3, and a break of the predicted RSI, a leading indicator, led to a substantial move to the downside on gold. An excellent call here from VantagePoint when combining all of these indicators together. This, of course, led to a dramatic sell-off in the euro-US currency pair, because like I said, guys, the euro is highly correlated to those gold contracts. So when gold's moving higher, the euro is usually moving higher across the board, particularly against the US dollar. So right now we're going to see if gold can move lower, but as long as gold is moving lower, the US dollar is moving higher. So that brings us to our first Forex pair, Euro-US. We can see here that our triple EMA cross and our critical level from VantagePoint continues to actually hold here. 106.42, we've closed at 106.74. So we're looking for the market to stay above all three of the key VantagePoint predicted moving averages. Right now we're holding above our 8-day and our 18-day, but our basically our 3-day predicted moving average has been breached. So it could be an early warning sign, or it simply could be a short-term corrective move. But our predicted differences here, they are moving lower. Our predicted short-term difference is down, and our strength indicator is down. But our predicted MACD is not crossing the trigger back to the downside, and we are holding at 57.3 on the predicted RSI. So not a lot of upside momentum here, guys. And I don't think we're going to see that upside momentum until at least Wednesday when we get into the ADP report. But again, right after that ADP report on Wednesday morning, we've got to deal with the FOMC, the monetary statement. It's going to be volatile. So if Janet Yellen makes any comment towards Trump whatsoever and the Fed is nervous, then the dollar is going to take a hit. So remember, be very, very careful on Wednesday trade. But right now, the euro is still predominantly bullish, while above 106.42. And again, this video is being made Sunday afternoon, 2 o'clock approximately, before the market open. So again, we look for these levels ahead of it. So right now, 106.42, that's the level to watch. The US Swiss franc, the key VantagePoint level here, 1.0075. We're closing at 99.90. Now, what I want to point out here, guys, is we have significant support sitting at 99.50. If we lose 99.50, we close below 99.50, we are going to go potentially much lower. But if this area holds, then we're likely going to come back up and test this key VantagePoint pivot point, the 18-day predicted moving average at 1.0075. I think this is the more likely outcome prior to Wednesday. After Wednesday, it could be a potential free-for-all. But again, our short-term and medium-term predicted differences are starting to move higher, and our strength indicator is above the zero line. So our predicted RSI is completely flat, as is the predicted MACD. So a very sideways move on the Euro-US and the US Swiss franc. But again, know your levels, guys. If you know these key levels that I'm pointing out, then you can react to them when the market comes to them. Now, as we come into the British pound for next week, we've had a bullish move up here, a big break, but now we seem to have paused. So when we look at this, you can see that we have swing highs back up here in this 127, 128 level. There was no further advancement this time. We have not made any new high. This is a series of lower highs. So it does point to potentially more downside on this particular currency pair and potentially the Great Britain currency in general. A classic signal from VantagePoint right here. We can see our neural index moving to the downside, but our medium-term predicted difference crossing over our long-term predicted difference to the downside. This is a very, very powerful signal from VantagePoint. On our last swing high, we saw the exact same signal, and that led to this substantial sell-off from 128 all the way down to the 120 level. So again, if we connect the dots here, you can see that a number of those indicators were a warning sign. The neural index moved lower. Predicted MACD was very mixed, but if we follow down to our predicted RSI, it really did start to move on the downside. But the leading indicator here clearly was the VantagePoint predicted short, medium, and long-term differences, and more importantly, that crossover of the long-term predicted difference. So right now, pretty bearish potential outlook here. This could be a new trend line forms off of here. But in order for Great Britain US to get moving here, guys, we would have to break above 127 and hold above that area. Right now, very clear warning sign that this could be going lower. We look at the short-term crossover from VantagePoint here. Again, it's warning us that the move to the upside is losing momentum. Our predicted RSI is starting to turn back down. The RSI, predicted RSI from VantagePoint, a leading indicator, zero lag, guys. So when we look at this with those predicted differences, it basically brings us that we should be looking at this as a warning sign that we could. It doesn't mean we are going lower, guys, but it does mean that we should be aware that this rally in the British pound could be very, very short-lived. And again, this could be real money exiting out of the long trades ahead of the FOMC, ahead of the non-farm payroll numbers. So keep that in mind. And with that, we see the dollar yen, which brings me to the dollar yen is now recovering. We can see that the dollar yen support is holding at 112.50. A lot of activity around the VantagePoint 18-day predicted moving average at 114.71. Now the theory with this, if it's above it, we're long. If it's below it, we're short. So right now, we've closed at 115.08. So it is technically bullish. And again, our predicted short, medium, and long-term differences are advancing higher. Predicted RSI is above 50, not above 60 yet, but it is turning, and our predicted MACD is getting ready to cross the trigger to the upside. So it does look positive. Now, people ask me all the time, what should I look for when I'm trading the dollar yen based around intermarket correlations? Well, the easy answer to that question is we should be looking at gold. If we want to buy US Japan, we need gold moving lower. And if we want to buy dollar yen, we need the equity markets, the Nikkei, the S&P 500, the DAX, all the global indices. We need them moving higher. So as long as the equity markets are stable and they're moving up, the dollar yen will follow. The yen will weaken. The Swiss franc will weaken. And of course, the euro currency will weaken. So that intermarket correlation is of critical value here. Now, when we come into our main commodity currencies here for next week, the first thing I want to point out here is that we have significant trend line support at the 130 level. So if we're buying this, we want to make sure all stops are below the 130. Right now, we can see that we are starting to turn higher, but this is a very, very mixed bag here, guys. Our neural index is up, but our predicted short, medium, and long-term differences are down. We've got a makeshift crossover in our predicted MACD, and we're struggling right at the 40 level on the predicted RSI. So when we look at this, longs do carry an edge as long as oil remains below $55 a barrel. If we lose the 130 area right here where I'm identifying this trend line, then US Canada is going to go substantially lower. But at this particular time, I think that that is very, very unlikely. I think that we're going to remain sideways until we get the ADP report on Wednesday. We've got to hear what we really do have to look deep into what the FOMC is going to say in their statement this coming week, because the Bank of Canada has already said that Trump is making them nervous and that they're not opposed to cutting rates. So that's going to keep downward pressure on the Canadian dollar, which means we would be looking to buy US Canada. So the 130 level is a big level. Our key VantagePoint level is 132.16. We're closing below that at 131.50. So to take the pressure off the downside, we need to get back up above this key VantagePoint 132.16 level. Now, we've already challenged the 3-day predicted moving average from VantagePoint, but still below the 8 days. So keep an eye on these pivot areas. They're very important, but right now there is a slight bullish tone to this particular pair. And of course, again, we want to make sure we're very, very mindful of what oil prices are doing. If oil is moving up, US Canada is moving down. If oil is moving down, US Canada is moving up. I say this with my own direct clients on a regular basis, that I can trade US Canada without even looking at the US Canada chart. I'm not a proponent of following a lot of the different types of trading systems, Fibonacci, Elliott wave, Gann angles. I don't follow any of that. My primary focus is intermarket intermarket analysis. In most cases, an intermarket correlation will trump any other indicator you're using. So keep that in mind. Now, looking at the Aussie US, we've had a big run up here. The main intermarket correlation that I talk about every week, I'm going to say it again, I probably sound like a broken record. Aussie US, New Zealand US are 90% correlated to gold. If gold is turning lower and continues to move lower, the bottom line is Aussie US will follow that. We have a new trend line that is formed at the 76 level. Only a sustained break of 76.20, 76.30 will take the pressure now off the downside. Our key vantage point level comes in at 74.74, and we are likely to retest this level sooner rather than later, up until at least Wednesday till we get the ADP report in the FOMC. That could be a game changer. After that, Aussie US could be at 78 for that matter. It depends. Everything this week, guys, is data dependent. It's a heavy week with economic data, and you should always lower your position sizes and widen your stops a little bit, but don't get caught with holding on to positions here. Now, our vantage point indicators here, our predicted short, medium, and long-term differences are falling. Our predicted MACD is flattening out. But surprisingly, our predicted RSI still remains bullish. So you can see we've got a very mixed bag here. We are holding above the key vantage point 8-day predicted moving average, this particular blue line right here at 75.29. So 75.29 represents a pretty significant level of support here. We're closing at 75.45. So once again, we've got a mixed bag here, but we need to break through this trend line. Right now, we are not making any new highs on this currency. That's the bottom line. We are making lower lows, to be clear. So once again, the next move in gold is going to determine the direction in Aussie US. If gold starts breaking back out to the upside above 12.15, we want to get long Aussie US pretty much right away on a trend line break. So once again, all of this is ahead of the market, guys. Nothing is lagging. Nothing is behind the market. The market is closed when this video is being produced. So these levels are being identified prior to any of this even happening. So if you know these levels, then you can respond to them and react to them. Let the market come to you. That's what I say to my own guys on a regular basis. Don't chase it, let it come to you. Same as New Zealand, US. New Zealand a little more bullish here clearly than the Aussie. The key vantage point level there, 71.46, 72.18, and 72.52 with a very bullish close of 72.60 above all three of the key vantage point levels. Now, if gold moves lower, Aussie US will move lower, but New Zealand US will likely follow. So we could have a top in place here. We always want to make sure we're combining intermarket analysis with price action. Critical. So when I look at this and I look at the main vantage point indicators, I can see very clearly that these are starting to move sideways. Our shorter term indicators from Vantage Point, our neural index, our short-term predicted difference, they're all moving lower. And again, with the neural index. So we can see our predicted MACD is starting to flatten out. The predicted RSI in heavily overbought territory. Basically, it's been going nowhere fast for the last 3 to 4 trading sessions. So this could be it, but it could be just simply nothing more than a corrective move back down to this key Vantage Point 18-day predicted moving average at 71.46. But once again, guys, a very data-dependent week. We don't want to make large bets going prior to the FOMC on Wednesday or prior to the ADP report, even at 8:15 on this coming Wednesday morning. So remember what I've said here. Very, very choppy week ahead, and I wish everybody a great week of trading.